AMC stock seen a big influx of capital here today, and the volume really speaks volume to what is going on with AMC. Fundamentally, there was some positive developments, but I think in the sense of the short squeeze, there was a lot more positive developments that we need to get into here in this video, guys. So to me, it does look like the short squeeze is starting. Don't get it twisted. Don't get me wrong here. I think the squeeze is happening, but I don't think it's at the point where you're going to get the explosiveness, right? I think you trend higher for a while before you get the actual shorts to cover. And we'll talk about how high and where I think that could go, what the timeline kind of is in my head for this trade this time around with AMC, guys. So we're going to get into this. We're going to take a look at the volume on AMC. Where were people actually acquiring shares, as well as options? What are the most interesting strikes that hedge funds are targeting? But most importantly, we're going to take a look at what happened today with AMC, how this fundamental development really changes the game fundamentally for AMC, how that contributes to shorts covering on their short positions, because ultimately the only reason you even short a stock is for fundamental purposes or for fraud or something along those lines, right? And on top of all of that, we're going to take a deep look at the technicals here in this video and kind of revise the price target for the end of this week, because I think today, Monday, to get a 12% gainer really does change things quite a bit. So let's get into all of this key information. Hit that like button and subscribe to the channel if this is your first time here. We are TCI, baby. We cover everything you need to know on a day-to-day basis with AMC as well as the broad markets. And there is going to be a couple things tomorrow as well that could shake up the markets. Not really expecting it to, but we'll talk about it. So let's get straight into it, guys. AMC stock was up 12% on the day, like we just showed with the 1-minute candlestick chart. It was pretty explosive, especially towards the end of the day once this news did come out. Now, I don't think this was shorts covering. This was very explosive, but I think there was a lot of option activity. For a fact, we know there was a lot of option activity, especially during this moment in time. But I do think there was a lot of people going out and buying AMC as well as Ape, because Ape also rallied on the day today. So there's been some people that have been in this arbitrage strategy of trying to play the conversion between Ape and AMC, where they're going out and they're shorting AMC and they're buying Ape. Well, you're seeing both of these assets going higher today. So on one hand, you're winning on your Ape, you're losing on your AMC, but what if in the end, the biggest beneficiary of this whole thing is AMC and not Ape? I think you're starting to get a little bit of that conversion from hedge funds buying Ape into hedge funds buying AMC. Now, to the reasoning why I think more hedge funds are opting to buy AMC here today is the company announced that it will explore plans to flex pricing on its seats depending on the location of the chair. Seats in the middle of the theater will be more expensive, while seats on the outside and aisles may be cheaper. Now, this sounds like something that should have happened a long time ago. Well, because it should have happened a long time ago. There is no service in the world that gives you a better service than another service that does not charge you more for that better service. Think about an amusement park. If you want to buy the cheaper tickets and wait in line an hour, 2, 3 hours to ride a ride, well, all fine and dandy there. People do that. If you don't and you want to pay a little bit more to get jumped up to the front, that's usually an option at amusement parks, right? And there's a lot of different examples to this, but long story short, this fundamentally is huge for AMC. It's going to add tens of millions of dollars to AMC's bottom line every single quarter, and it's going to cost the company nothing to add that revenue. So it's a very creative way, like I said, it should have happened a long time ago, but a very creative way to bring in more revenue, and that is something that a lot of people liked with AMC here today. And how could you not like that? How could you not like that? That is very positive. That is a very sound business model, to have better seats cost more and cheaper seats to, well, likely stay the same, right? So that was very big on the day. Also, if you take a look at the or text data, you are seeing the cost to borrow rates continuing to hold up. The Interactive Brokers short availability has 0 shares available, 385% cost to borrow rates. This is definitely having an impact on AMC, as you have seen cost to borrow rates continue to go higher for weeks now. The live short interest of free float is sitting at 22.5%. The amount of shares currently sold short is at 116.12 million. Cost to borrow average at 360, cost to borrow max at 423, and cost to borrow minimum at 7.6%. But like I said, I really don't think this is a shorts covering kind of rally. If we go ahead and click on Webull and take a look at the volume breakdown that we are getting for the day, you could see total puts volume at 530,000, total call volume at 432,000. But what is interesting about this is, besides for the $4 puts and the $3 puts, that's where a lot of the option activity was today for the put side. On the call side, from where we are at, almost $7 per share, up to the $20 strike, the calls have thousands more for option activity here today. Now, the $2 and the $4 and the $3 puts, those definitely skew the numbers, because the calls at the $2 strike, you had 2.3 thousand calls placed on the day, 157,000 puts on the day. $4 strike, 11,000 calls on the day, 121,000 puts placed on the day. And at the $4 strike, about 11,000 and then 121,000 again. So you are seeing, people are, hedge funds, overweighted on these puts that are pretty decently far out of the money at this point, the $2, the $3, and the $4 strikes, whereas a vast majority of this volume that is not concentrated at these small strikes or these low strikes is the $7, the 750 strike, seeing 30,000 calls and 5,000 puts. The 650 call, seeing 42,000 options bought today, 6,000 on the put side. If you look at the 1250, that's another big one. About 19,000 calls that were placed on the day and 417 puts that were placed on the day. The $26 call as well, 20,000 for volume on the day, and 95, not even 100 puts bought on the day. So as far as the option statistics and the option analysis here, you are seeing a lot of those puts that are the $2, $3, $4 strikes getting bought up by hedge funds and institutions, but at the same time, you are seeing a lot of overly weighted bullish activity from where we currently are up until the $26 strike, $25 strike. It gets up there. So bottom line here, I do think this is somewhat of a hedging strategy heading into a potentially bullish week for AMC, and this does not surprise me that you see these $2, $3, $4 strikes that have such a bearish weighting compared to the rest of the chain, because after all, you don't want to be all in one way or the other if you are a hedge fund. So that is what I think is happening. I don't think it is necessarily a bearish thing at all. After all, not too much has actually changed with option activity from the hedge funds. Now, let's go ahead and take a look at the technicals. So the technicals, guys, this is becoming a more and more fascinating thing for me, and it makes me more and more bullish, especially the longer we just continue to trend to the upside. No, I get it. We're up 12% on the day. Is the short squeeze starting? Yes, in my personal opinion. Is this the short squeeze? No. I think people forget the stock is at $6, right? So if you get 1,000% from here, that's going to take you to $60. Cool, all fine and dandy. Well, if the stock goes to 20 and then you go up 10x, you're going to be at $200. So you actually want the stock to continue to make these slow and steady moves to the upside before you get that ultimate, 100% day or 200 or 300% day like you seen in June. Now, on a technical level, this is the biggest thing that I have been watching. The 100-day moving average and the downtrending level of resistance. And you are getting a lot of analysts today pointing this out as well as I am. So it's not going to be hard to see if you just search on the internet, analysts on AMC. You're going to see them calling for a run to the 200-day moving average and voicing their opinions that if it gets higher than the 200-day moving average, it's going to continue to rally. And that is exactly what I've been saying. What I have literally been waiting probably about the past week, roughly, as we have been making this move to the upside, is do we get out above the 100-day moving average? Do we get out above this downtrending level? Because you have not been above this since the June rally. And I think there's a lot of things that are very coincidental from, you know, June of 2021 when AMC rallied the first big time to where you are at right now. So fundamentally speaking, what does this change being above this downtrending line as well as the 100-day moving average? Well, the biggest thing is going to be the sentiment in AMC, because now you are in a technical uptrend, right? You're in a technical uptrend. You broke out above these major moving averages as well as this downtrend line. So as far as sentiment goes, it looks a lot better than where it has been over the past couple of weeks. You have shown that we can break out and hold these levels, especially into the close today. It would have been nothing for AMC to drop back down to 3% positive or even negative on the day. AMC does that like it's nobody's business, right? Can explode and deflate very quickly. The fact that you did not deflate today and the S&P is down about 0.65%, again, a very positive thing. But the biggest thing I think this changes is the algorithmic trading program. So as of right now, it looks like the trading algorithms are going to be forced to be a little bit more positive with AMC now that you have broken out into a bullish uptrend, because ultimately these guys want to make some money. You're going to flow with the wind here. If it has been bearish ever since the June rally, statistically speaking, with this downtrending line, and we've got rejected at this line every single time, well, now, different story. Well, you're probably going to see a lot more bullishness and attention to the upside, especially heading into AMC earnings in early March. That is going to also be another major event, and I think you could get some very positive things that are said on that earnings call, as well as just the overall box office lineup for 2023. I think it's a no-brainer here that AMC is going to have better numbers in 2023 than 2022. That goes against a short thesis in and of itself. In and of itself. I mean, you don't want to short a company that is going to do better in the future than it just did in the past. So for a lot of reasons here, it looks like the sentiment, the trading algorithms, as well as just the positive news we're getting is shifting the dynamic with AMC to be a little bit more rewardative, for lack of a better word, to reward the stock a little bit more when these things happen, because over the last year, you've seen a lot of good news come and go that really did not break you out above key levels. It didn't hold you above those key levels. Like, you would literally drop some days when you were getting positive news. Does not look to be the case here today. So as far as where I think AMC could go for this week, I think the 200-day moving average, that is almost a guarantee. I am not a financial advisor. These are only my opinions and data that you can find most of the time for free. Ortex is the only thing you have to pay for, and we literally read off the numbers. So do not listen to what I say as financial advice, but I do think it's almost a certainty, at least in my mind, how I am basing my positions and my trades with AMC, that you're going to hit the 200-day moving average. That is at 778. I don't really expect that downside unless you get bad news coming from Fed Jerome Powell tomorrow, which is very possible. He does speak at 12:40 p.m., so that lunchtime kind of lull in the markets, he will be speaking. And if he does not want to see the stock market rally in the way that he caused it to rally after that FOMC press conference, well, you're going to see the markets get battered down. And I think AMC would be no different in that equation. Again, though, today the markets were red and AMC was substantially positive, so it doesn't always have to correlate with that. But what you really want to see from here on out If we could get to $10 per share this week, I think that would be very exciting. Now, I'm not going to, hold my hat to that. I'm not going to die on a hill for that. But with this momentum that we're seeing, I think it's very well possible that you could gap up above the 200-day moving average, especially if that happens, call it by Wednesday or Thursday. It looks like Friday is going to be a pretty big day as far as FTDs, and then the following week is going to be even bigger. So what we have for FTDs, if you did not watch the last video with the T plus 35 settlement time, tomorrow you have 716,000 failure to delivers, 861,000 failure to delivers on Wednesday. On Thursday, you do have 583,000 failure to delivers, and then on Friday you are going to get 2.2 million failure to deliver. So I think starting off Monday was such an aggressively positive day, and for good reasons, right? Fundamentally, this is big for AMC. Let's not underplay that. Fundamentally, it's going to help to cause this bullishness. It's going to help to squeeze out shorts from their short positions. AMC is literally going to create tens of millions of dollars in revenue for their business without any increase. It's not even going to cost money to make millions and millions and millions of extra dollars for their earnings. So granted, let's not underplay that. That is big, and that is a big reason, obviously, why we did rally today. But you also see AMC on the threshold securities list. You also see massive FTDs that come due for delivery by this week, right? And then even next week, 1.5 million shares that will have to be closed out of. That'll be coming on Monday, Tuesday, and Wednesday. Not to mention anything else that might pop up after that. So for a lot of reasons, cost to borrow rates, literally short interest, there's so many different reasons, and this time really does look similar to what you've seen in June. For all of those reasons, I'm very bullish on what we have in store, and I do think the MOAS is starting. But when I say it is starting, I don't mean it's going to happen all in one day. It's not going to happen just tomorrow alone, right? I think you're going to get a week or two, at least at the very minimum, of kind of this uptrend, right? You might have a big day today, you might have a smaller down day tomorrow, you might have a big day after that, a smaller down day after that, or two small down days and then a big day, right? I think you're going to trend to the upside, and ultimately you want to see that happen. You want to see AMC as high as possible heading into earnings, in my personal opinion, because that, I think, can be the real catalyst to get a MOAS, especially if you get free cash flows or just an overall net profit, which would be not what people are expecting and massively a bullish thing. But on top of that, you want to get the stock as high as possible before you do get a 100% day, like even what you've seen with Bed Bath & Beyond, or 200 or 300% week, or 500% week. That's what we're looking at over the next, I think, month, right? So when I say the short squeeze is starting, yeah, it's starting, but I don't think it's going to be the end of it soon, right? I think you're going to get an accumulation phase. AMC continues to rally. Slow and steadily, I would imagine. Maybe it's not all going to happen this week. Maybe it's some this week, some next week, some maybe even the week after that, and then the week of earnings. You might actually see the shorts covering. But the higher we get, the more pressure is put on those shorts to cover on their short positions. And especially as the business does show it is improving fundamentally, well, that is the icing on the cake. So that is it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day, and I will see you in the next one.